welcome to the Real Estate Mogul M.D. podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable, real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins.
Have you ever had those days when you thought that something has to change? Is it the hours? Is it the stress? Is it the compounding hours and stress that doesn't allow you to leave work or get home and still be at work? What's it feel like when you have one of those days and your family still needs you and you're unable to do that? Well, then you've probably thought about exiting what you're doing because of those things. You're going to get some value today from our guest, who's a board-certified physician, #1 best-selling author, entrepreneur, and real estate investor. She's the co-founder of Shalev Properties and has built a real estate portfolio of over 5,100 units with $184 million in assets under management. This is massive. This is a wonderful story. And now she has exited her spot from the emergency room and is full-time living life by design. Everybody, please welcome Dr. Ronnie Shalev. All right, Ronnie. So we always start by just telling us a little bit about your medical background. Tell us a little bit about how you got, I guess, interested to be a physician and where that path led you and where you're at now.
Yeah, that's a great question. So I always wanted to be a physician. It was just ingrained in me. And my father was a physician and he kept trying to dissuade me. He kept telling me, no, you won't have a life. You'll be married to the hospital. You'll have no flexibility. A lot of the women at his time, women physicians, didn't have families. They didn't have children. He was very concerned that I was going to kind of lock myself into a life that was just married to medicine. But I was like, no, I want to be a doctor. I don't care. I'm going to find a way. I'm going to have flexibility. I'm going to have a family. I'm going to have kids, period. Like I'm going to have it all. And I did. I went into medicine. I was an ER doctor. And one of the reasons I chose emergency medicine was because it creates a lot of flexibility in your schedule. First of all, you don't have a pager. So no one can call you out of dinner or you're out or something and you had to drop everything and go to the hospital. When you're on, you're on. But when you're off, you're off. And there's a lot of flexibility because you know when you're leaving the hospital. So you come in at, let's say the shift starts at 7 a.m. and it ends at 7 p.m. or whatever it is, 9 p.m. to 9 a.m. or whatever the shifts are, you are leaving. Maybe you'll stay, an hour after to wrap up or to finish your charting or something like that. But when you're leaving. A lot of the other physicians, they never have that schedule. They never know when they're going. So I was able to create my life. I worked, 15 shifts a month. And then I was off for 15 days out of the month. And I could move it around and schedule things on those days. So I had flexibility. So, that's one of the things that I loved about emergency medicine.
And what kind of physician was your father? What was
he was a anesthesiologist, pain management.
Okay. So he did not have that schedule.
No, he was, 6 a.m. coming home at 9 p.m. Then he would have to chart. So he would be falling asleep charting in his office till midnight. And then he would just do that over and over again. And then on Saturday, he would round and then he would go and finish all his charts and then catch up on journal articles. And then the weekend would be over and the whole thing would start again.
Wow. And in comes the opportunity for burnout and just this never ending turmoil. And that's the life that steals our life away from us. And I think that's exactly what he was probably trying to keep you from. But it sounds like your choice in an emergency that helped you control your schedule and do the things that you want to do, have a family. And I want to quickly get into real estate, Ronnie, because it's such a big part of your life now, right?
Yes, for sure.
So how did it all happen? Because you've left the emergency room, you've left medicine, and now you're full-time with Shalev Properties. Tell us a little bit about that journey.
Yeah. So, I mean, I thought I had it all figured out. This is how I'm not going to burn out. I'm going to have the life I wanted. And I practiced emergency medicine for 16 years. And all of that didn't insulate me from the burnout itself. I remember a shift. I was working a night shift. It was around 10 o'clock at night, and I was taking care of 2 stroke patients at the same time. I had to figure out like who's going to get a CT scan, who's getting the neurologist. At the exact same time, I had someone that was having severe trouble, like severe respiratory distress, trouble breathing, from asthma, and someone that was having a heart attack. So all of those at the exact same time.
Wow.
Not to mention the ER every room was full. The waiting room was packed. Ambulances kept coming and kept coming. And a nurse tapped me on my shoulder and handed me an EKG of someone in the waiting room that I hadn't seen yet that was having a heart attack. And I was like, oh my God, right? Like all of this happening at the same time. I looked up at the clock. When is my relief coming? 8 more hours.
Oh my goodness.
So it was me. And I had to just put my head down and just survival mode for everybody. I took care of every single patient that night, and no one died. Everybody lived, great outcomes. I didn't eat, drink, sit, or pee that shift.
Wow.
I came home. I was exhausted, collapsed on the bed. In my scrub still. My kids are trying to wake me. Hey, can we go to the park? Can we do this? I'm like, I can't move. I feel like a truck hit me. And they didn't understand, how could they understand what I had just been through? Right. It was kind of like a war zone, like in the trenches. And really it was, a lot of it has to do with hospital administrators. They had cut our hours. They had cut our staff. They had decided you don't need an assistant. You don't need a scribe. You don't need a nurse practitioner. You can do it all on your own, because why? Well, their bottom line, they wanted to make more money so they can handle it. The ER doctor is not going to complain. And if they complain, we'll replace them. Not only that, but, they made sure to tell me that if they didn't like my metrics, that I could get fired. I was replaceable. So, when I finished my shift, I was like, is this it? Like that day when I woke up, and is this what it means to have made it? Like, this is my life from now on. I'm replaceable. I'm physically exhausted. I'm mentally exhausted. I'm a commodity. Like, they don't care. I just was like, I need something else. Like, I need a change. And it took me a long time to make that change, because I still practiced another 8 years after that day.
Something changed that day for it to be, as soon as I asked this question, it was back to that day. Something changed, Ronnie. Yeah.
And that was the day where I said, something has to change. My husband turned to me and he said, you know what? You're a high paid hourly worker. And, at first it was like he slapped me or something. Like, what? high paid hourly worker. Like, how could you say that? I'm a physician. I'm an ER doctor. I'm board certified. I went to 20 years of school. And he said, you have to figure out how to not change, how to trade your time for money, like how to break that cycle. Like, how do you make money? And not be at that hospital. Like, how do you do that? Like, how do you make money? And I'm like, I don't know. I only make money when I'm in the hospital. So he's like, you got to figure it out. And that's when we started looking at investing in real estate. I had one of my husband's friends had a piece of 100 syndications in 7-Elevens. He was, that's all he did. He was like, I own a piece of 100 7-Elevens. I'm like, 100. What does that mean? How do you do that? He's like, I don't do any work. I don't operate the business. I just make passive income. And all of those words were foreign to me. Right. And I'm like, I don't understand how you could do real estate and not be involved and operate the business. And so my husband's like, let's just try it. Let's just do what he does. Like, he's successful. Let's just try it. What's our alternative? Our alternative is just to do the same thing that we've always done, which is work, save, put it in the 401k. And then at 65, maybe you can retire.
Right.
But I didn't know if I was going to make it to 65.
So the 7-Eleven piece, and your husband has, at that time, he was construction, right? So
at that time, actually, we owned a couple of CrossFit gyms.
Oh, interesting.
Yeah. So he does have years of construction background prior to meeting me. Mm-hmm. He worked for Turner Construction and Johnson Controls, and then he had a home building business. He's just been around companies. It. Yeah. And then he said, you know what? I'm leaving all of that and I'm going to open a CrossFit gym. And then I'm going to open up another CrossFit gym. And I was not an entrepreneur.
Yeah.
And I was like, just get a job. But he is a risk taker and an inspiration and has pushed me to be an entrepreneur myself.
Which is great, because in this change, as a physician, you are risk adverse. You are trained to take these steps to mitigate risk, right? And it's not a complete opposite, but being an entrepreneur is much different than being a physician. And to have your husband there to help, I guess, even out, my wife and I are the same way. Like, it's the same setup where I am I'm like the serial entrepreneur. I spin around and create these tornadoes, and my wife is conservative and just like has to pick up most of the time, because I'm a go kind of thing. So it's helpful to take this launch. And where did this go, Ronnie, from having this conversation with a colleague of your husband's? It's like, I've got a piece of 100 7-Elevens. Where does that go into your first deal? Tell us about your first deal.
Yeah. So we were like, can we do the next deal with you or whoever you're dealing with? Like, we didn't know much about it. And so it was he brought us in a triple net lease for an auto zone in Minnesota. It's like signed a 20-year lease. And we put in $25,000. We started small. We were like, okay, let's dip our toe in. We started with $25,000. And then 6 weeks after closing, they refinanced. And they gave me back like 90% of my money. And I still owned it. So I was like, wait, what just happened here? Like, I don't why did they give me back my money? I wanted in the investment. I thought it was going to be locked away for whatever, 10 years or however long it is. And it was cool because I still own it and I still own it today. And so they gave me back my money and I was like, okay, so I put in the next investment. And so we were just kind of rolling And we just started getting very interested in this whole concept and educating ourselves. So we started investing in retail centers and self-storage, in triple net, in industrial warehouse, RV parks, mobile home parks, assisted living, apartments. We just went all in real estate, just because I absolutely love real estate investing. And I feel like you can invest in so many things and make money. So we just kind of went all in.
And that when you say triple net, that's meaning that the tenant is paying the expenses of the building, correct? So it's insurance, taxes, and maintenance.
Yes.
Triple net. And those are really nice leases. So
it's very low maintenance.
Yeah.
You know, you just buy the building and then you lease it out, and that's it.
Yeah. You have to make sure that the tenant is doing what they should, because it's still your asset, right? So there's still asset management taking place there. In that regard, that 25,000, so that was a known colleague already. So that was just a straightforward, it wasn't a syndication. And it sounds like that you still have equity in that building. Is that, are you getting cash flows then still from that 25, or was it just an equity split on that deal?
They give me a small distribution every quarter.
Okay.
So I'm still cash flowing. It's very small. But, you know, at that time, I don't even think I saw an offering memorandum. Mm-hmm. I didn't even know, like, what's the plan? What's the exit strategy? Like, I didn't know. It was a syndication. And we just we're like, okay, let's sign the papers and go. And I don't recommend that for everybody.
Yeah.
But we took action. I think what's important is taking that action, because
Absolutely.
if you're worrying and thinking, you're never gonna make money.
So if you looked at it this way, Ronnie, worst case scenario, nobody ever wants to lose $25,000. Worst case scenario, you lose $25,000. But what if, I think the better question to ask is, what if it does work? Because now we can see it looking back, Ronnie, is what if it does work? Now you have $2,500 left in this deal, and it's still continuing to pay you back. And I'm sure that you've made your money back already of that $2,500. But the question is, what if it does work? Now look where you're at, because you took that first $25,000 risk, right? So what if it does work? That's a better question. And now we can look back at your path and see, okay, now these things start stacking. You start diversifying, looking at different opportunities, and fast forward all the way to where we're at today. How many deals are you in currently today?
We just had a couple sell. So we are in around 30 deals, and as passive investors, and then 7 as general partners.
And what is your favorite deal?
I have a great, it's in Wichita, Kansas. It's an 88 unit apartment complex. It's a small, cute little deal. It is, an extended stay hotel that was converted to apartments. And we acquired that in January. And that's my favorite deal. Why? Well, really the team. We have an incredible team that's managing it. And we have a great property manager. And we've got great maintenance people. And everything is really going to plan with that deal. It's just that's my favorite deal. It's just like, this is what it's supposed to be. You know, no one talks about like how hard it is, right? But this one is, everything is just on target. So that's my favorite deal. But it's really because of the people, the staff on site. As you know, like with this economy, like finding good qualified people to work that want to work is hard.
Yes. COVID kind of rocked the world, I think, in
It
that
messed
regard.
people up. I mean, you pay people for 3 years to sit at home and you tell them it's okay. And then you say, okay, now you got to go back to work. And they're like, what do you mean?
Mm-hmm. Yeah. That's a whole nother podcast, I think. Definitely. But the biggest piece, and we say this all the time, real estate is a relationship business. And the more passive that you are, the more you depend on your power team. And it sounds like your favorite deal is based around that power team and your experience after taking that $25,000 risk of building these teams and looking at opportunities. I think is really important. So there's a lot of stuff going on right now with syndications. Maybe in my mind, this thing in my brain that sees the red car now that I own a red car, if you know what I mean, with physicians and syndications and all of this stuff happening, like it's a cool thing to do. As of the last couple of years, there's a lot of opportunities for physicians, high income earners to invest in these passively. What are some things that you would say watch out for the listeners out there today when they're seeing these opportunities?
I think that the biggest thing is that people write all kinds of numbers. You're going to get 23% return and a 3.5, X on your, right now, after so many years of investing, I have learned to take those projections with a grain of salt because they're based on certain assumptions. And when you are digging deep into the assumptions, when you're doing your due diligence before you invest in these properties and these syndications, you need to make sure that those assumptions were acquired through a third party, but even those third parties can be very positive, oh yeah, you want to see the property management company usually gives you what rents they can achieve. They know the market, right? But they also want your business. So they're going to make it very pretty and the expense is very low. And then you're like, great, that sounds great. And then you get into the reality where we can't bump rents. We're evicting a lot of people. People are losing their jobs. We can't just raise the rents. Or we didn't think that turnover rates between the properties when people move out are going to cost so much. So just making the apartment make ready, unexpected expenses, also, I mean, in Texas now, property taxes have jumped like crazy. Insurance rates have jumped like crazy. So there's a lot of assumptions that you can't make in those pro forma models, and people see those numbers and they get all like, ooh, yeah, I want to do that. Of course, that's what's driving you to invest, but you need to make sure that you're looking at those numbers and saying, is that real? And being kind of using a critical mind to look at the underwriting.
And I have to mention, on your website, shawinproperties.com, you have a media page on there, and the very first video actually is a masterclass that you've put together, Passive Real Estate Investing for Beginners. And I watched that. I love that. I think you break it down so simply for the things, like I just asked that, what to watch out for. Watching your masterclass video is going to give you that knowledge base to understand a lot of the things that you just talked about there. So I would encourage the listeners to go to your website, shawinproperties.com, and watch that masterclass. You did a great job on that, by the way.
Thank you.
Very cool. It's very, very helpful. And now you've got all of these deals in place, and Shawin Properties is actually diversifying a little bit more. So tell us a little bit about what you have going on these days.
Yeah. So with the apartment, the multifamily industry is feeling a squeeze right now.
What do you mean by that?
The interest rates are up, right? And if there's floating rate debt, which most of the deals are, anything that's closed in the last 2 years usually have been closed with a floating rate debt in order to be competitive enough to get the property. You used the floating rate debt. And there's a squeeze because what happens is when there's floating rate, your mortgage payment is up, and that's eating into your cash, right? So there's a squeeze because now everybody's withholding, they're in preservation mode. They're kind of withholding any distributions. They're just trying to ride out this challenge. And apartments are feeling a squeeze. So I'm like, well, you got to start looking around. Like, just because right now is a bad cycle for apartments, there's good cycles for other things. So we're starting to look at other things. And then when the cycle changes, we can shift back and forth. It's not just one and done to me. So we started looking at really other opportunities. I'm all about tax advantaged investments. And my investors would come to me and they say, depreciation is great, when you're having cash flow or you're exiting, but it doesn't really help against my W-2 income. And I'm not a real estate professional, so this just doesn't do anything for me. So I started looking around, like, what can help with ordinary income? And really, there's just, the government incentivizes you to invest in certain things and gives you deductions. And that's when I started looking at oil and gas investments. And there's something called intangible drilling costs, where it directly crosses out your ordinary income. So we started investing in oil and gas opportunities. Couple years ago, my husband and I own mineral rights, and then we own wells of our own. And we also have invested in funds where the drillers are going in and drilling and exploring and things like that. And so we're able to find opportunities to save on taxes. I mean, you're going to pay your money somewhere, right? It's either going to go to the tax man, or you can put it in an investment and maybe it'll grow. So that's kind of where I'm thinking about it. And I found a great partner that I've been investing with. And, I put in $100,000 last year, and off my, income, I was able to have a deduction of $80,000. And so that translated to around like $30,000 in taxes that I didn't have to pay, that I could use for a different investment. So that's when I was like, wow, this is something I should bring to my investors. If they want it, if they think it's important, I'll bring it to them. And so that's kind of how we stepped into a different alternative investments.
Is there any kind of recapture?
No.
So when we depreciate real estate, we have to recapture. So of these tax savings in oil and gas, there's no recapture of that?
No.
Interesting.
Yeah. So the intangible drilling costs are like while there's exploration and all that stuff. And then after that part, when you're just getting oil, you don't get that intangible drilling deduction anymore, but you get a depletion allowance. So that's 15% that you don't get taxed on. So instead of 100%, you get taxed on only 85% of that income. So it's also tax advantaged.
Yeah, what a game. There's so much to it, even in real estate, whatever kind of investing, the whole tax code is just
it's mind
blowing. It's mind blowing. And it's, it's I guess so complex to the advantage of the government that you've got to know these little nooks and crannies in order to implement the benefits that they do give us.
Right. And I highly recommend getting a tax strategist. And that's not your CPA. My CPA's mind is blown every time I'm like, we're doing this and we're doing that. Make sure you're capturing this. And he's like, oh my God, but you need someone to tell you if you invest in here, you can do this. Someone that is using the strategy to help you, guide you, plan it.
Proactive, not reactive.
Proactive. Right.
Yes.
Absolutely.
Yeah, that's a big piece. So we've got diversification now. I mean, all the way from the emergency room to into real estate, multifamily. That first one was an auto zone. Now into diversifying into oil, gas, doing a little bit of private lending as well too, switching up the asset classes, some build to rent stuff too. Have you gone further with the build to rent? Tell us a little bit about that.
Yeah. So we are in the process of acquiring a property in Florida that is, a community, 32 unit townhomes. And just rent them out. It's very similar to apartments, but they're like little homes. And honestly, like no one's going to be able to afford a house. And especially with these interest rates and the fact that it's just more and more difficult to get a loan, that people are just going to be renting for a longer period of time. And when they rent, a lot of times they want a house. They want to feel, and this is kind of like the single family rental, but on a grander scale.
Interesting. In what market is that? What area of Florida?
Miami.
Miami.
South of Miami.
Yeah. Very cool. Very cool. What's one thing that you, if you could go back in time, Ronnie, 16 years ago, and you know where that moment led us, right? To that one day. What's one thing that you would tell yourself, maybe that evening, whether it was before you collapsed on the bed and the kids come to you, what's one thing you would tell yourself 16 years ago?
I mean, I think I would tell myself, like, you did good, like you made an impact today. You saved a lot of lives. I think that as physicians, we don't stop for a second and say that to ourselves, because it's huge. Making the impact is what I'm here on this earth for. And I did it in the ER, saving lives, and now I'm making an impact, helping people grow their wealth. And I'm even going to Africa in 3 weeks to do a medical mission trip. So I'm still trying to make an impact. That's kind of my endless journey. I want to make an impact. I want to make this world a better place. And telling myself, you did that, I think would have been very soothing. Yeah.
And I've got a mastermind that I was in. They made shirts. It was CAW. Celebrate all wins. And if that's what you're saying there is just slowing down, being present in the moment, and congratulate yourself, celebrating those things, because they get lost in the push when we're too focused on something outside of our reach and keep driving and driving and driving. We don't take the moment to be present and see, wow, we just did that today. Wow, good job. Just do this. So going back 16 years and congratulating Ronnie on what you're doing and what you continue to do. So congratulations to you, Ronnie, for this journey, sharing this, and now helping others, get this plan rolling. So this idea of diversifying your income, multiple streams of income as a necessity, not as a luxury, and creating this life by design. So thank you for that. Thank you for your time today, Ronnie. I appreciate it. Even with my Barry White voice here, we got through it. So the listeners can, I know the kids are always like, what's wrong with you, Dad? Are you okay? I'm like, I'm fine. It's fun. But thanks again, Ronnie. I really appreciate it.
Thank you so much for having me.
Awesome. And the listeners can reach out to you directly by Ronnie at ShalwinProperties.com. It's RONNIE at SHALWINPROPERTIES.com. Hopefully I spelled that right. If we got it, we'll have it in the description of the show here. And to the listeners, again, thank you for your time. Hopefully you've got some value out of this. And the biggest thing is being present in the moment. So as you listen to Ronnie, I guess go back in time and tell herself, hey, you're doing the right thing. Stay focused, but be present and celebrate each one of those little wins that you have We all have a different path. We all have different opportunities. We all have different experiences. When we stack these together and learn from each other, we can make a huge difference in the world. So thank you for your time today. Thank you for your attention. Any questions for us? Feel free to email us at info@physicianwealthsystems.com. Drop us a little review. We love it so we can get out to more people. Until next time, thank you very much.